How to stop a tax deed sale in Florida. So welcome back. I'm Ted Thomas. Now, I've been involved in real estate for the past 50 years. I've been involved in tax liens and tax deeds for the past 30 years. So in this episode, I'm going to cover how to stop a tax deed sale in Florida. Now, actually, it's not a difficult process to stop a tax deed sale in any state. So I'm going to cover that, okay? So a tax deed sale is really a tax defaulted auction. That's the formal name for it. So it's an auction. And so I'm going to cover how you're going to stop that auction. And the process is not going to be difficult. But let me lay down some foundational information about tax deeds and tax liens so that you become a mini expert. Now, on the way, I'm also going to cover the two biggest mistakes that people make at tax defaulted auctions. I'll do that towards the very end of this video. So stay tuned for that, and I'll come right back. So let me get started with that foundational material. As I said, a tax deed sale is nothing more than an auction. It's a tax defaulted auction where a property owner did not pay the property tax, and now the treasurer has taken action. So if you didn't know this, a treasurer is authorized by the legislature to, number one, charge taxes. In other words, levy taxes. Number two, they're mandated to collect those taxes. If they can't collect the taxes, what they do is they confiscate the property. When that property is confiscated, what they're going to do with it is they're going to ultimately auction it. They're going to sell it and use the revenue to pay the back taxes. So it's the tax deed sale is really an auction. Generally speaking, it's an oral bid auction. However, today, many of those auctions are online. All right, now, I didn't create the statutes. The statutes are the state laws. Okay, these laws are firm, but they pass all the laws from the state down to the treasurer. Once that tax is levied, if it's unpaid, the property owner is going to be in big trouble because they're going to confiscate their property. Now, generally speaking, taxes are only 1 or 2% of the property value. Only 1 or 2%. So it's not a big tax for people to pay, but if they don't pay it, they're going to lose the property. In other words, they forfeit their right in the property if they don't pay it. All right, so this episode is all about how to stop a tax deed sale in Florida. The easiest way to stop one is just pay the tax. All right, if the property owner doesn't have the money to pay the tax, it's going to auction. However, a bank could come in at any time, pay the tax, and stop the sale. The bank can stop a tax deed sale just by paying the tax. The property owner can stop the auction from taking place by paying the tax. Now, I can't tell you how many times I've been in an auction room and had someone come running from the back of the room, waving a check at the treasurer, waving at the auctioneer and saying, "I've got the money, I've got the money." Now, if you go and check the statutes and the rules for all these auctions, it will say when the auction starts, they can go ahead and finish and auction the property. But I'm here to tell you, treasurers are elected officials. If they see someone running from the back waving that check, I've seen it happen again and again. Even if the bidding is taking place, they'll stop the auction, which the treasurer has the power to do. They'll stop the auction and they'll accept the check. Now, of course, if that check isn't good money, the person's got a problem because now they've violated all the state laws. But the point is, the treasurer has power. So understand, when you go to an auction, the treasurer has power. They're the most powerful person in local governments. Why? Because they control the money, and in this case, they control tax liens, tax deeds, all the auctions. Okay, now I said earlier the treasurer has the ability to levy the tax, collect the tax, and confiscate property. So the treasurer is a powerful individual. If you want to stop a sale, you and I as people are not going to do that. The property owner could stop it by paying the tax. A bank could stop it by paying the tax. Those are the only two ways that I know of, unless you bought the property the night before and ran in and tried to do it then. But I don't know if that's going to happen. All right, so the county treasurer has seized the property. That means you're talking about a sale. They're thinking about an auction. So the auction is going to wipe out the mortgage. So when they're going to wipe out the mortgage, they have to make notices called due process and let everybody that's on title know about that. So a mortgage gets wiped out, in other words, pushed off the property, cleaned off the property. They don't tear the mortgage up. The person that owns the mortgage still must pay it. It's a promissory note. They still must pay it. But the treasurer can take it off the property file. That way, when you buy a property at auction, when you purchase it, you get a property without a mortgage on it. All right, people are worried about this because if you're the banker, you have collateral. You have a big investment in this property, but you'll no longer have the security of the property. You'll still have your mortgage against the person if you're a banker or a lender, but you certainly won't have security on the property. All right, the county just wants one thing out of this whole deal. All the county wants is they want to collect the back taxes. They want the taxes. So they confiscate the property, they put it up for auction. You're going to call it a sale. I'm going to call it an auction. County's going to call it an auction. That sale, auction, whichever you want to use, is going to take place. There's no way you can stop it. There's no way the bank can stop it. But the bank can come forward and pay the tax. The people can come forward and pay the tax. However, they're limited in how many days they have. Although I've seen them run down the aisle waving their check, and the treasurer bends the rules. Okay, treasurers can bend the rules. You can. Okay, the banker and the homeowner can pay the tax and stop the auction. So you're kind of getting the idea. I hope you're getting some good information from these trainings. If you are, you can put questions about them. You can put them below. You can make comments below. And if there's other videos that you want to hear and see, well, just let us know, but you have to write that in below me when I finish this video. Okay, now I've seen tons of live auctions. I've been to many, but I'm going to tell you the treasurer has power. So understand you will follow the auction rules. Understand the highest bidder is always going to get the property. This has been going on for 200 years. Everybody's got experience except you when you go to the auction. So everybody's experienced, so follow their rules. Winning bidder always is the highest bidder. They're not going to walk in with cash. In the old days, people used to walk in with a briefcase full of cash. That doesn't happen. No more laundering of money. Now that you'll have to have cash or equivalent. Equivalent simply means a cashier's check. Go to the bank, get a check, be able to hand it. If you don't do that, you're not going to be a bidder. And if you bid and you don't have money, that would be a big mistake because the sheriff is probably going to take you out of that auction. Okay, so quick repeat. The treasurer is the most important part of government. If this property doesn't sell at auction, something's going to have to happen to the property. So I'll have other videos on that. But what happens basically, if the auction takes place, nobody buys, they'll try again at another auction to sell it. If they can't, they'll put it on a leftover list. Might be called a surplus lands list. Could be called a forfeited lands commission list. Could be called a scavenger list. I don't know what they're going to call it, but it's a leftover list from the auction. Those properties are available, no bidding. No bidding when they're leftovers, okay? My students buy 10 and 20, 30 cents on the dollar, but when they buy with no mortgage on the property. So I'm going to finish up with these couple of questions, but if you have questions yourself, what I want you to do is just go below me and write them in when I finish. So here's those questions. Now, the question is, should you get the assessed value from the county or should you get it from Zillow? Well, you should get it from everywhere you can. First of all, you can check with property values. You can check with the real estate board. By that I mean the multiple listing system. You should check with the county. You should check with Zillow, and then make up your mind if you have got the right value. Is there upcoming sales is the question. The county will publish the sales, but they don't do future sales. How would they know? They're taking over these properties every day right up until the day of the auction. So they'll publish the list of what's going to happen on the next auction, but that's all that you have. They're not publishing in advance, that's for sure. All right, folks, if you learned a lot in these lessons, we have a lot more for you, and all you have to do is join my community. Now, I have a gift for you if you do join the community, and all you have to do is go below me, but the gift is a quick start. Now, what does quick start mean? It's just a short course that's online that you can start right away learning about tax liens and deeds. The first part of the quick start is about tax lien certificate. The second part is all about tax deeds. You can learn both of those, and you can do that. Just go below me. It's a free course. It's my gift to you.